Wow, 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 wow. What an earnings call from Palantir. Oh my goodness. The stock price is currently at $18.50 as of the making of this video, giving it a nice 3% spike. Not anything unusual, not anything to write home about, not explosive. 3% increase. But the one thing I have to explain here is that this earnings season is not forgiving for companies to screw up. Every single company that have screwed up in this earnings season paid dearly. I can name a few names, but there's no need for that. The fact of the matter is, Palantir is up 3% after the earnings, means that Wall Street saw this, it digested it, and it said, well, good, Palantir, keep on doing the good work. You're right on track. Nothing explosive came out of this, obviously, but also nothing negative. Good, keep on going, keep on moving, keep your eye on the ball. Very good. So this is not something to basically start posting victory laps over as far as, oh, Palantir is smashed. No. None of this. Good job, Palantir. Good earnings call. Great performance by Karp and team. We'll talk about that in a second. Absolutely phenomenal delivery on the presentation side of things, which is something I was asking for months, for years from Palantir. This was hands down the best earnings call by Palantir as far as comfort, ease of presentation. Karp was in his element. He was killing it the entire call. He was making fun of analysts. He was joking around. He was delivering value. He was basically knocking it out of the park. Sham was terrific. The entire team was absolutely spot on. They came prepared. They were relaxed. So hands down, the best Palantir call to date. Very impressive. Now, more on the financial side of what happened in this call. Number one, obviously, we have talked a lot about the potential of S&P inclusion. I don't think I've heard anybody from Palantir talk about S&P inclusion as much as they did in this call. I think they mentioned S&P inclusion at least 10 times or more. This means that they are now on the path of actual S&P inclusion. This company and the team would not have mentioned S&P inclusions for so many times if this wasn't honestly on the table. Now, the conditions, just the dry conditions to get included in the SP500 is for the company to have 4 consecutive quarters of positive gap. Basically, be profitable from a gap perspective, 4 quarters in a row. Palantir just did the 3rd consecutive quarter today. All they have left is 1 single quarter to be eligible. It doesn't mean they're going to be included. There's no guarantees. But the fact of the matter is they will be eligible in 1 quarter. And they've said in the earnings call they expect to have another positive stability quarter way ahead of time, by the way. We expected this in 2025. So nobody's talking about the fact that Palantir just basically beat their own estimate by 2 years of achieving gap profitability early. So the fact of the matter is, management mentioned it multiple times, makes me think they have a little bit more on the inside track of what's going on. So I think they're pretty confident on that S&P inclusion. That's a very important thing because S&P inclusion means that all the institutionals, all the companies that cover Palantir and are basically looking from the side, getting interested, will be much more excited. There's going to be a lot more money going into Palantir. So S&P inclusion, remember what it did to Tesla. It's probably going to do something similar for Palantir. If it happens, at this point, we're literally 1 quarter away from the potential that happening. Very important. The other thing that happened for the first time in history since I remember Palantir, that management has announced that they're going to do a $1 billion buyback. It's a huge thing, but before you jump off your chairs and get all excited, nobody said 1 billion in a year. Nobody said 1 billion in 10 years. For all I know, this can be 1 billion over the course of the next 25 years. They haven't set a time frame for this. So nobody knows when, how much. So this 1 billion is just a declaration of intent. It's a framework. It's nothing binding. There's no clarity on how fast this happens. Now, as far as the buyback, is it good or bad? Look, there's arguments in either way. On the one hand, you might make the argument, that buying back shares is bad for the company because it's taking away money from, putting money back into the business by, investing less in R&D, investing less in CapEx, capital expenditures. Basically, if you're giving your money away to the shareholders of the company while buying back shares, less money is going into the development of the company. And I totally get that. But with a company like Palantir, which is free cash flow positive for years, they're making money, they're generating cash flow, and they're sitting with $3 billion of cash. They can use $1 billion of it over the course of the next 10 to 15 years, I don't know how long, to actually show Wall Street, show institutional investors that they think that the share is cheap. Because that's what the purpose of buybacks is, to show institutional investors that you think as a company that the share price is cheap. Now we're getting to the more interesting part. Carp team talked about 5,000 AIP clients in 10 weeks. Absolutely insane. Just get these numbers. And they talked about 3 times that number being interested in it right now, kind of working around the process of being onboarded. Absolutely insane numbers. Now, more important than that, besides the potential of AIP, which is absolutely out of this world, we'll talk about that in a second, is that Carp dropped a massive bombshell on this call and nobody noticed. He said, hey, we're now aligned with the IT departments of companies for the first time in history. And we're seeing unprecedented interest from IT departments. And you guys don't understand the scale of opportunity we're dealing with here. And we're linking our future stock-based compensation of all employees to AIP success. By him saying all these things, what it actually means is companies are no longer basically battling Palantir. Back in the day, Harp himself said our biggest challenge is the point of contacts in companies' IT departments. They don't want to let us in to showcase to the management what we can do because we're going to make them look bad. Their own product, whatever they built, it's not going to hold up against our stuff. So they're blocking us. Now they're saying, well, the IT departments are basically asking us to come on because they need us. Exactly what I said a year ago was going to happen. I said a year ago, go back in my video, I said, at some point, not having Palantir is going to be much worse to your job than hiding the fact that your system is not good enough. It's exactly that moment that just happened right now. Massive, massive development for Palantir. Carp also obviously said, hey, we're not for sale. We're decades ahead of everybody else. We're educating the market about the products that the market actually needs. And we're going to be the world's most important software company in existence. Again, you combine all these things, he's saying, hey, we're the best in the business. We're going to be a massive behemoth of the company. You ain't seen nothing yet. Not nothing you haven't heard in this channel before a million times. Of course, we have 13% revenue growth. Look, it's not as good as the previous quarter, right? We had 18% in the previous quarter. So there's a declining revenue growth here for sure. It's not amazing. You have to take that in context. In the context of this macro environment, these interest rates, this economy, 13% double-digit revenue growth is fine. I'll take it. Obviously, when you have 38% customer count, it's even better. And when you have 31% international revenue growth from governments, which is the point that was the Achilles heel of companies, Palantir, that governments outside the United States, especially, from Europe, kind of apprehensive about working with them. Now we have 31% growth in international governments. Massive move for Palantir. Top 20 clients keep on killing it. Currently 15% up. And that's $53 million per client for the top 20 clients. Massive numbers. But there's also an Achilles heel here. It's a double-edged sword. When your top 20 clients are basically in charge of about half of your revenue, it's a huge client concentration risk, which is very dangerous for the company. This is a point where I like that. It's a lot of money. We talk about a lot of cash flow, but also, when top 20 clients are responsible for 50% of your revenue, you got to be careful with that. That's something they have to be careful. Obviously, with retention of 110%, not a lot to worry about. Retention is flat. It hasn't gone up. It hasn't gone down. It was 111% the previous quarter. It's okay, especially when they're guiding for $2.2 billion. Absolutely insane. Now, what I do want to talk about here, and it's really important, is the share price. Now, look, the share price currently at $18.50. I'm not going to plug anything in this video, not my Patreon, my plans, not my Discord, nothing. I'm just going to let you know simply. I don't care if the share price goes to 16, 15, or 25 tomorrow, or next week, or next month. I couldn't care less. If I think that this is a $1 trillion company, and you just heard pretty much Carp allude to that on that call, why would I sell now? Why would I panic if it drops? The only thing I'm going to do is this. I'm not going to panic sell. I'm not going to do FOMO. I'm not going to buy lump sum if it dips tomorrow. I'm not going to do anything crazy. All I'm going to do tomorrow is the same thing I've done the day before, the same thing I've done the day before. Drink my coffee, put on my underwear, buy some Palantir shares. That's it. If the share price goes below $18, I'm going to buy a little bit more. A little bit more. If the share price goes above $18, I'm going to buy a little bit more. Just a little bit. So very, very simple. DCA, dollar cost average, below $18, buy extra. Above $18, buy less. But DCA, no matter what happens. Why $18? I've explained this multiple times. For me, that threshold is 10% below the 52-week high of $20. For you, it might be anything else. But for me, that's my way of creating a weighted average around the share price is going to bring back my price. That's the whole system I use. I'm not going to buy a lump sum. I'm not going to put in $150,000 into Palantir tomorrow. I'm buying Palantir every single day, every single week, every single month, no matter what happens with the share price. Very simple. Don't forget that message.